It sometimes seems the words pension and scandal were made for each other. A report by the financial regulator has again generated bad headlines for the pensions industry. The Financial Conduct Authority found that 80% of people could get a better pension if they shopped around for the best annuity before they retired. The problem is most people don't know what an annuity is, so they're hardly going to be good at shopping around for one. Also, people are not good at listening when pension companies try to tell them. So, here are the basics. There are 2 stages to getting a pension. The first is during your working life, where you save into a pension pot, either provided by your employer or into a personal pension plan you've set up yourself. The second stage is when you come to retire. If you've been a member of a traditional final salary scheme, you're lucky. Your employer will pay a pension linked to how much you earned at the end of your career, or take an average of your earnings. Either way, you don't need to do any more. However, if you're in any other kind of pension scheme, and nowadays that's most of us, you have to provide your own pension with the money you've saved. How do you convert your pot of money into a pension or annual income you can live on? That's where the annuity comes in. An annuity is a life insurance policy that takes your savings and in return pays you an annual income for as long as you live. How much income you get depends on the annuity rate you're quoted when you buy the annuity. The Financial Conduct Authority found that although most people know they can shop around and buy an annuity from other companies, in practice most just take the annuity they're offered by the company they've saved with. That's not a recipe for success. According to the FCA, people could boost their retirement income by 7% a year by looking for a good annuity rate. The suspicion is that some pension companies are exploiting their customers' inertia and offering a lower rate than they otherwise would. One reason for the apparent disinterest in annuities is people's disappointment when they discover how small their pension pot is and how little it will provide in retirement. According to the report, the average person buying an annuity has a pension pot of £17,000. This will typically produce just £1,000 a year in income. These are pathetically small sums of money. Even if they shop for a better annuity rate on the open market, according to the FCA, they'd increase their income by just £67 a year on average. It's clear, to get a good result from annuities, you need to start saving as early as you can and to save as much as you can. Remember, the bigger your pension pot, the bigger the income you'll be able to live on in retirement. By starting young and saving long, hopefully you'll take greater interest in how your pension plan is doing. And if your pension company writes to you with an update and explanation of what to think about in the years approaching retirement, you'll read the letter and won't chuck it in the bin. If you're near retirement and thinking about an annuity, here are some pointers. Most people buy a flat single life annuity. That means it will pay one level of income that will stop when you die. That might not be the right thing to do. You can also get joint life annuities which will pay an income while you or your partner are alive. You can also get annuities that provide an income that rises over the years. This is a good defence against inflation, the effects of which many people underestimate. The annuity rate you get is largely determined by how long you have to live. It's really worth getting a health check to see if you qualify for an impaired life or enhanced annuity. These will pay a higher income than a normal annuity. And remember, you don't have to buy an annuity straight away. If you have a bigger pension pot of around £100,000, you can manage your savings and draw down an income without buying an annuity. But as with everything with pensions and annuities, the situation is complicated. Even if you've never been to an independent financial advisor in your life, it's well worth going to one when you plan to retire. Once you buy an annuity, you can't change your mind and get your money back. It's vital to know what you're doing with the money that's supporting you for the rest of your life. A bit of expert help might be just what you need.